Welcome to another edition of Down the Road. We're headed into the new year, right? I hope you're off to a good start to 2022. I hope it's a better year than what 2021 was. In fairness, I think 2021 was a better year than 2020, which was a total crap year. So there, I'm on record with that. We're going to talk about a number of things today. We're going to talk about the Kim Potter trial. That's right. We're going to talk about that verdict. We're going to talk about the where this goes from here. I don't know how close you followed that trial, but the verdict surprised me a little bit, and yet it shouldn't have, in speaking to a number of attorneys that I've spoken to. And so we'll get a chance to visit with Mark Fries about that with the Bogle firm. And so Mark will be in here in just a second, and we'll talk to him. But it's tax season, right? Just the words you want to hear. It's tax season. I've known Mark Larson for a long time now. He's going to get mad when I say this, but I'm going to say it to get him mad, right? This man's a football player. He's in Fargo South Hall of Fame. I don't care that he's going to get mad about that. Mark is a CPA, and he is with Financial Forensics of Fargo, which is a long way of saying he knows what the heck he does. Let's bring him in and talk to him a little bit. Mark, good to have you coming down the road with us.
Thanks, Joel. Good to be here.
You're a Hall of Fame at Fargo South.
Yeah, that was when a 200-pound tackle kid could get on the field in a high school game.
You forget that I did recon on you. It wasn't just, it might have been a different era where 210, 220 seemed big, but I'm just going to say this. They said you hit like a mule. So there, I got that out of the way, whether you like it or not.
The back end of the mule, right?
It's tax season. I was sitting there in my hometown church, right? They're changing things. The church that all I and my siblings grew up going to, and mom and dad are buried in the graveyard of. And so that church is going to raise its parish house, which was where everybody went if they had to go to the bathroom. And now they're going to put a bathroom facility on this beautiful old Catholic church. I told all my siblings, I waited until now, even though I was going to hit them up for money. And I said, you know what? We need to give to that project. And it's perfect for tax season. Was I right or was I right?
Yes, absolutely. Things have changed since the 2018 Act, where the itemized deduction, or the standard deduction, has been elevated so much that a lot of these charities have been hurt by that because they used to make sure that they donated so that they could write it off. Now, with the increased standard deduction, it may not generate into tax benefit. So a strategy would be to alternate every other year. Double up on your contributions one year, pay your real estate taxes, and then the next year take the standard deduction. So hopefully this is the year where everybody's going to itemize and your church is going to build that addition.
So here's the problem for the average Joe like me, which is you get it, understand it. You're brought in nationally on cases to do forensics, to get how many courtrooms have you been in?
Well, I've testified about 35 to 40 times.
There. I mean, you're brought in because you know what the heck you're doing. We don't. I mean, we don't have a clue. And when the tax code changes, it even gets worse. And so you might have a Sister Heidi that was tax commissioner that knows about it and always says, no, kind of things. But it's you that people like I count on. And so why can't it be more simple?
Well, you would think that it could be, but there's a whole lot that's legislated through the tax code, from social policies to charitable events. And so there's just a whole lot. It's a mishmash of things moving the economy through the tax code. Last year the year before, we had 3 different tax codes during tax season. And it caused chaos. So, there's a lot of folks, because theoretically it got simpler because the standard deductions were increased and they did their own return, they're going to miss out as well, because if they're not plugged in to somebody that has the time to keep on top of all of this, they're going to miss some benefit.
So that'll never change. I mean, the government has no other tool to make its social policy of, hey, if you donate here, you get a break there. If during COVID, here's how we're going to kick some money back to you. I mean, for people like me, that when I was young, it was like, okay, got my 1099, here's where it is, you pay here, that's what you got. I could do my taxes on the back of an envelope.
Yes.
But it's never going to be back that way again.
No, it really isn't. It really isn't. Once you start meddling in the economy by your tax policies, it's going to be chaotic from there on out.
So you're sitting at a kitchen table with folks, and they raise these type of questions. What is the biggest misnomer that they have about the tax code and their taxes?
Well, that is fair. A lot of people, it isn't fair. There's a lot of inherent unfairness built in because we've got a lot of folks that are in the gig economy. So, meaning that as a result of COVID, they've left their jobs and they're going to start their own business, and you know that there's not 100% compliance there. So there's a whole bunch of unfairness where they're getting away with things, at least they think they are, and who knows if they're going to get caught. Whereas the average wage earner, like you said, you get your W-2, you report your interest income, and you're stuck. You don't have much more you can do to control your tax liability.
If I, when I'm on my radio show, bring that up, which, you told me this before, and I know you're right about it, that it isn't fair, that the code is built not to be fair. They know what they're doing when they do this. If you talk to a machinist in Fargo, and you talk to him about farmers and ranchers and what they can deduct and where all this goes, there's hard feelings about those type of things.
There is, absolutely. There's talk about a flat tax where if you have so much in gross receipts, you're going to pay this amount. And the unfairness there is if you have an egg producer and he's got a big business, a lot of volume going through, but because of things beyond his control, his expenses are greater than his income, guess what? It's not going to be fair to him.
Right.
Because he suffered economic losses.
Right. And a lot of the expenses he has, say you buy a new combine today, $1 million,
Correct.
Right?
Yes.
Is that something that you depreciate out over 3 years, 5 years?
Well, you can, depending upon the dollar amount, you can elect to write it off through bonus depreciation or the election to expense all in 1 year, if you need it. So that's why people buy it before the end of the year. And as long as it's available to be placed into service, it doesn't have to be placed into service, but as long as it's available to be placed into the service, you've got a deduction there waiting for you.
How big did the tax code change under the Trump administration?
It changed quite a bit. And it has changed a lot since then as well. Like I said, there's been 3 major tax law changes: the CARES Act. I don't remember all the names of them, but they have changed quite a bit. Again, trying to provide an economic stimulus during this pandemic so that the economy goes on.
When you were close to the same age, when you and I were growing up, and you heard politicians talk, all they wanted to talk about was the national debt. You didn't hear them saying that we're going to raise the child tax credit. You didn't hear them saying that, we're going to put a cap here. We'd talk about things like trickle down.
Sure.
I get that. Those were words Ronald Reagan used. And then we'd hear other definitions of, how the tax system worked. But, now it doesn't matter what side of the aisle you're on. It seems like, as you pointed out, with the tax changes that have happened, it's like the government isn't trying to get revenue.
Well, I think that's something that's been quiet lately. You haven't heard a lot about that. When I was a revenue agent, fresh out of college, I would go out, I'd do an audit, and I'd propose $1,000 change to somebody's taxable income. The maximum rate back then was 70%. So I'd drive back to the office, and I'd have a $700 check to tender to the Treasury. Well, now the maximum bracket is 37%. Well, let's look at where we're at. Look at the cost of this pandemic and all of the economic stimulus payments and the PPP loans, and there are a few industries, the hospitality industry, that really needed it. It rescued them. But there's an awful lot of businesses that it was absolute gravy. And on top of that, then it became tax-free income. So who's going to pay for this? And nobody's talking about that.
And it up into the debt.
Correct. And I think that's not to get involved with politics, but I think that's one of the big problems with the Build Back Better program going, or the bill that's, bouncing around now, is people are starting to realize, well, we got to pay for all of it.
Mm-hmm. Well, and that was Joe Manchin's argument.
Certainly.
His argument was, you can say that it's going to pay for itself based on what you think is going to happen in the future, but I'm not necessarily seeing it now. And it was a tough argument to argue against. It really was.
Yes.
Want to talk a little bit about, individuals in terms of what they pay. If I'm pulling in $80K a year, working for somebody, and pay my taxes at the end of the year, and my neighbor next to me owns a business, and he made over 1 million gross receipts, who paid more taxes?
Well, it obviously it depends. The higher gross taxpayer you would think would pay the most, and if you consider or throw in the self-employment tax, that probably pushes you over, and it results in a large tax liability. Now, what you're getting at, I'm sure, is that the individual business owner has got the liberty to take expenses that are ordinary, necessary, reasonable, and customary, and that's where the debate begins. Mm-hmm. Because there's a lot of discretionary expenses that get written off, and some are ordinary, necessary, and reasonable and customary. And obviously, the government sometimes says, no, this is not ordinary, necessary, reasonable, and customary. And that's where the tax controversy comes in.
Hey, thanks for hanging with us. I told you Mark Larson knew what he was doing, right? Just a little background again. CPA, Financial Forensics of Fargo. It isn't like he's jumping up and down for more business. He gets pulled at 100 different directions, but he's good enough to come on with us and talk a little bit. There were two things I said I wanted to touch with. Number one was getting ready for your taxes. What's your advice to the average John and Jane out there as they get ready for their taxes?
Well, the most important thing is to keep records. Keep records. Make sure that you have your bank statements that are ready. I think it's important that now, particularly this year, because of the advanced and enhanced child care payments that you received, 2021 is the time when you true it up, or if you will, you demonstrate that you deserved and earned those advance payments for child tax credit. So you're going to need that information. You're going to need information regarding any economic stimulus payments that you have, and that sort of thing. And keep good records, and summarize for the tax preparer the information, expenses, have all the forms ready. It's quite an effort. I think if you talk to any professional, they'll tell you that we've probably got the easy part. It's the taxpayers and our clients that have to manage all this information and get it through the funnel to us.
How many people, and can you smell this right away? If somebody comes to you, you can scratch your head and say, the difference between just simply not understanding versus they're trying to cheat. I mean, can you smell it right away?
I think any qualified tax preparer is going to qualify the client before they accept them. Ask questions like, why are you coming to me? Who did your return last year? Why is there a change? Was there a disagreement as far as philosophy? That sort of thing. So I think that's the one good thing. If you're looking for somebody to prepare your return, have that information ready for them. And if they don't ask and they blindly accept you, I'd be concerned about that.
Okay. So, being prepared, going in and having that ready, how often do you see people that, quite frankly, there's a big red flag and you're going to have to, not something illegal, not something like that, but you're going to have to ask for an extension? How often does that happen?
Well, that happens a fair amount, If you, I like to have all of the information in by April 1. If you don't have all your information by April 1, generally we're looking at an extension. And that causes problems, because if you extend the return just because you're asking for additional time to file, that doesn't extend the payment of any balance due that you have. So you have to be on top of it. And if you don't pay in enough when you extend it, you've got penalties and interest accruing.
Are extensions red flags for the IRS to look at an audit?
Not necessarily. I think the most important thing is what's in the return or what's not in the return. Remember, for the most part, they know an awful lot about all of the income that you've received through 1099s and W-2s and all the information items that they get that's filed with them. So you're going to want to make sure that you report all of your income. And then the next hot topic for being selected for audit would be, do the expenses make sense? And the relationship between the expenses and the income, you'll get a kick out of this being an old ref. There was I heard about a high school phy ed teacher that was adamant about expensing his uniforms and all of his other stuff for refing, but forgot to report the income. So that's a bad result.
We used to, as a joke, we reported the income because we didn't want to get in trouble. But we used to, as a joke, you'd have a crew of 5 guys, you'd sign the back of the check, somebody else, the guy that assigned the game.
That's right.
And so you'd tell him, hey, you signed the check that night. And quite frankly, the weird part was that you could get by with this then. There'd be some local pub where you'd meet and they would take the check.
Yeah.
Think about that. Those days are long over.
Yeah, they are long over.
Yeah. So, let's talk about it in terms of the audit itself. Is that a huge don't sleep that night moment for people when they find out that the IRS is going to audit them?
Well, that's a loaded question. I always advocate that if you are going to go through an audit, have somebody represent you. Hopefully it's your CPA that's prepared the return or an attorney that's in the tax preparation business, because it's like a different language when you talk with the tax code and talk about the tax code. It's really easy to get compromised real quick if you don't understand the specific terms and that sort of thing. So you're at a disadvantage right now if you're a layperson and you're going to represent yourself. So that's a bad thing to do. The other thing, I think, is if you've done the best that you can and you feel comfortable that you've got all your income reported and you've deducted the expenses that you're entitled to, and it gets back to record keeping, and if you have the records and receipts, there shouldn't be any reason to sweat it.
Okay. What about this? When people think about it, it's like, man, what did I miss? What on the income side, what are they going to come back and say, no, this wasn't an expense and you owe more on tax, that
Sure.
type of thing. What if it's the opposite? When they audit, what if there's expenses that you missed that you didn't file that would have taken that income down? For example, is that subject to helping you in an audit?
It could be, yes. It could be. The first thing is to recognize that, because the IRS typically doesn't hunt for expenses that you didn't report. They're going to go through and verify what's on the return, and once they reach that point where they've verified the expenses, they're going to stop looking, because it's up to you to support the information and get that information on the return. So, but if you do realize in preparing for the audit that, geez, I missed this expense, bring it to their attention, absolutely, right on the front end of it, because I think a lot of that is a good faith disclosure, as well as any mistakes that you have. The Internal Revenue agent is going to ask you, do you know of any mistakes on this return before they even start? Mm-hmm. And if you have something to tell them, tell them.
How ornery do they get? How tough do they get?
They're no different than you and I, depending upon the night they had the night before and the lack of sleep or whatever, or whether they're hangry or not. They can be kind of difficult to deal with. They're people like you and I.
So are there less audits now than what there was when you started in this business?
I don't think there's any question that there's less audits. And COVID is going to probably accentuate that, because remember, just like any other business that went in shutdown mode, the IRS did as well. So what we're finding right now is that it's very difficult to get responses from the IRS because of the backlog. Mm-hmm. I've heard that there are millions of pieces behind in correspondence, although it is kind of interesting that they are still sending out balances due, and they're after we've responded to them, their cycle still continues, but we get no response to our explanation as to why it isn't due. So,
how does the Internal Revenue Service decide what to audit? Is it a name out of a bucket? You pull this name and it's Joel Heitkamp's turn, or is it, wait a second, there's something fishy about this?
Well, there is a program where they randomly select taxpayers, and based upon the results of that program, they tweak a secret formula that they have, or secret classification algorithm, to pick other returns. So that's that. There are criminal investigators that read the paper every day, and they watch the news, and they submit information that might be of interest to the Treasury, and you get audited that way. A prior audit might get you audited again if you had an egregious situation and you were pushing the luck, and or if you had poor records. They might issue an inadequate records notice and then come back a few years later to see if you've fortified your record-keeping system.
How about the dollar amount?
Well, there's a de minimis amount of, I think it's $100. If they come in, they audit the return, they find out that, well, it looks like you owe $95. They'll probably issue a no change letter with adjustments, meaning they're going to note that there were adjustments made, but it was below the threshold. Anything more than that, they will ask for payment. Okay.
Well, the upside for me is I have your cell. So, if something really bad happens, if they storm my house tomorrow, I'll know who to call.
Well, if it's really bad, we'll call Mark Freeze, and I'll work for him.
Who's going to join us in just a little bit.